So now we've talked about centralized exchanges a bit. We've talked a bit about decentralized exchanges. Now we want to learn a little bit about derivatives exchanges or leverage trading platforms. Now, leverage trading platforms or derivatives exchanges, futures markets, that sort of thing, are basically exchanges that allow you to trade with leverage. And these platforms I absolutely implore you to stay away from until you are considered an advanced or pro level trader. Because if you venture off into any of these platforms, you're likely going to make a mistake and cost everything you have. And I mean that. To give you an example, I will show you. So I do some leverage trading myself. And for years, there was a lot of hoopla, myself included, was adamantly against leverage trading. But I'll give you an example of something. Let me open this up. I'm going to show you my exchange here. Maybe. And I don't know why this isn't showing. There it is. All right. So this is my BitGet. Now, BitGet is it's an exchange platform that they have actually paid me to be an ambassador for. That's not why I'm showing this to you here. It's just the only leverage exchange that I actually have activity on right now. So it's easy to give examples. But you'll see right here, I'm currently in a short trade that I got into basically right here. All right. And so I don't know if you need to see my face right now or not, but so currently my short trade is negative $918. And I got into this trade at 16,000. Now, I believe that the price is going to come back down, but I made this trade at a 3x leverage, which basically means that I'm trading at a value 3 times more than I actually put at risk. The higher the leverage that you put at risk, so let's say I made a trade for 8,500 and I went at like a 10x leverage. Well, that 10x leverage means that ultimately my gains could be substantially more because it's as if I'm trading with 10 times the capital that I am. But the downside to this is that if the price goes the other way, I could get liquidated. So on a spot exchange, if I'm buying, let's say I'm buying Bitcoin and I'm trading Bitcoin. If I believe the price is going to go down, then I'm probably going to sell my Bitcoin for cash. I'm going to buy back in when the price is lower and be able to buy more Bitcoin than I originally had, right? Well, in a leverage trade, it doesn't really work that way. It's almost like an all or nothing game in the sense that if the price goes up, I'm going to generate a lot more profit than I would just doing a casual spot trade, because I'm doing it as though I'm using a lot more capital than I actually have. The difference, though, is that if I get liquidated, I could lose it all, which is why a lot of people are in crypto. You'll see, oh, got to take your profit, got to take your profit. You got to use stop losses and things. So I am generally not one to use stop losses. It is definitely something that most people should do. I only trade with money I don't care much about. And not by that, I mean, if something happens, I make a big mistake, I'm not betting the farm. I didn't go mortgage my house. Nothing, it's play money. I consider it play money. A lot of it is I'm educating myself. I'm learning the ins and outs of something. But ultimately, some people could go up to, they'll trade at 100x leverage and basically lose it all or win it all in a matter of a minute. And, I've done calculations in the past, and I don't remember what they all are, but I think it like 100x trade, let's say I were to enter a 100x trade at 16,000 and the price were to go up, I think it was 0.1%. If I did a 100x leverage trade short and the price went up 0.1%, I've just lost everything that I put that leverage short in. Okay. Because the higher your leverage, the lower your liquidation window. So like this trade, I'm only at a 3x leverage. So it's basically like I am putting into play more than I actually am. I think the trade was like $8,500 or something to that effect. And you can see down here, it's a 3x trade. My liquidation price is much higher. My liquidation price is $21,271. So the price would have to go all the way back up. And it's not to say that it can't happen, but the price would have to come all the way up here for me to get liquidated. So at that point, it's like, okay, do I believe the price is going to go down further than 16,000 or up higher than 21,000 first? What's going to happen first? Well, I believe the price is going to go down below 16,000 before it's going to ever go back up to 21,000. However, while that may be true, people that use higher leverage means that liquidation price is much lower and lower and lower and lower. The higher the leverage, the higher the risk, okay? The higher the gain potential, but the higher the risk. I always tell anybody that's trading, leverage trading is a pretty normal practice. It's been going on for decades in traditional markets. You've got options. You've got so many different vehicles for investing, but leverage trading is a big deal. I don't encourage you to do it, quite frankly, especially as a newcomer. Now, outside of that, this isn't a leverage trading tutorial, so I'm not getting any deeper than that, but I just want to show you that that's basically what this is. And you can open limit orders and have trailing stops and all sorts of fun stuff, but I don't really want you guys getting into that until much later on, if ever. So that being said, the question is, all right, what else is there to know about leverage trading platforms? Well, number one, not all of these leverage trading platforms are honest. I mean, I'm just going to put it to you straight up. A lot of these leverage trading platforms, some of them have been known to have internal trading desks that trade against you to try and liquidate you on purpose. Because it doesn't really matter if you do well against their internal trading desk, that means they're losing. If they liquidate you, then they're ultimately keeping all of your capital. And while many will try to pretend that doesn't happen, it's been proven that it does. And with a non-regulated leverage exchange, which just about any leverage trading platform is going to be overseas, not based in the United States. And it's very likely that at the very least, they're going to have a disclaimer saying, we don't want you here. You're not allowed. We don't want to deal with your regulatory bodies because you traded on our platform. Some are a little more lenient. Some may just throw up that warning, but let you move forward. A lot of traders, they'll go to exchanges where they have to use like a VPN or something to mask their IP address and make it look like they're from like Switzerland or something so that they can actually access these platforms. So, depending on your leverage and your experience, you could either be a complete degenerate who just loves the rush of losing money, which obviously those individuals exist. Hopefully you're not one. I don't want to see anybody losing money in crypto. But, in some cases, people make a lot of money. But at the same time, this is what you have to remember when you're even considering using a leverage exchange. There are people out there with considerably more assets than you do that can more easily control the market against you. Okay? Your $1,000, $2,000, $10,000 leverage trade in either direction, if you're trying to be greedy and make a quick buck, it's much more likely that you're going to get liquidated on either a short squeeze or somebody stomping out a long. I just did an article today where 100,000 Ethereum was just 100,000 long on Ethereum was just stomped out in 1 minute. And so there are a lot of systems to that, and we'll get into some of that information, not as it really pertains to leverage trading, because again, I don't want you to really get involved in it. But it's definitely, there are people out there who intentionally try to liquidate longs and shorts and back and forth. And the job for people that do that is ultimately a market maker. And so when you get into the market maker trading course element of it, or the market maker trading element of this course by a friend of mine who I absolutely adore and is super sharp, you're going to learn a lot about how that whole system actually works behind the scenes and their methodology, the way they think and why, and how it affects you as a trader. So, but on that note, I actually have some fun with it because honestly, if I'm bored, I'll do some snipe trades. A snipe trade is like I'm watching a 5 or 15-minute chart. I'm looking for opportunities to make a quick trade, whether it's a long or a short. I make the trade, I get out of it. Typically, it's something I do over the course of an hour or two while I'm working on other things. Swing trades, typically anything above a 4-hour chart to the daily or whatnot. That's typically what's used for swing traders. They're basically getting into a position, looking to get out, within, hours to days, sometimes even weeks, depending on the market. So anything beyond that is generally just an investor, somebody that buys low, holds for years and then sells at the top. I mean, that's pretty much what I've been doing since 2017 for the most part, while I dabble in a lot of these other things. So it's fun to experiment with, and it's you can get a kick out of it, especially, I have some trades where I made like $1,200 in an afternoon. Cool, that's fun. And then like you see right now, I'm in a negative trade. It's down like $900. So, it's an ebb and flow, and there's definitely a system to it. I don't even utilize the trading system for that yet. I'm just going off gut right now. So having fun, but it is dangerous. I could lose everything, and you absolutely could too. So keep that in mind moving forward.